Hello, hi guys. This is CA Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. Now, in the today's class, we'll be discussing question and answers from Audit of NBFC's, and we'll be discussing these question and answers from my question bank. And you can purchase the question bank along with audit concise book from the link that I'll be giving in the description. And if you want to revise entire audit, then you can access the playlist that I have created, audit revision playlist. You can access. Okay, now what we'll do is we'll start with a discussion of question and answers from audit of NBFC. As usual, I'll be trying to discuss this in as much as lower time as possible. Okay, starting with the first question. Shubham and Associates are going to start the audit of NBFCs. They have not performed much work for the NBFCs in the past years. You are required to explain the requirements related to registration and regulation of NBFCs which an auditor needs to keep in his mind while planning the audit of NBFC, which would help this firm. Basically, he is asking you regarding requirements related to registration of NBFCs. Basically, NBFCs, they needs to get certificate of registration from RBI, and they have to maintain net own funds of minimum 100 crore rupees. Let's see. Under section 45 IA of RBI Act, NBFC shall commence or carry on the business of non-banking financial institution. Shall not. See here, okay. No NBFC shall commence carry on business of non-banking financial institution without obtaining certificate of registration from RBI and having net own funds of 100 crore rupees. And a company which is incorporated under the Companies Act, which is desirous of commencing the business of NBFC, needs to make an application to RBI asking itself to be registered as NBFC. And however, certain NBFCs which are specifically regulated by some other authorities are exempted from regulation by RBI, because to regulate those types of NBFCs there are certain other authorities such as venture capital funds, banking companies, stock broking companies. Basically, all these are regulated by SEBI. Okay, even though these are NBFCs, they are regulated by SEBI. So RBI regulation is not required for these type of NBFCs. Some more examples: insurance company holding a valid certificate of registration issued by IRDA. If an NBFC is doing insurance business, then such a type of NBFC will be regulated by IRDA. So regulation by RBI is not required. So certificate of registration from RBI is not required, but certificate of registration from IRDA will be required. Hope that is clear. In the same way, Nidhi companies, chit fund companies, and housing finance companies, these respective NBFCs are having their own regulators. So RBI regulation is not required in those cases. Next, RBI has issued directions to NBFCs on acceptance of public deposits, prudential norms like capital adequacy, income recognition, asset classification, provision for bad and doubtful debts, risk exposure norms, and other measures to monitor the financial solvency and reporting by NBFCs. Basically, these are the certain directions, guidelines which have been issued by RBI, which must be followed by all the NBFCs. And the directions were also issued to auditors, not only to NBFCs, even to auditors of NBFCs also certain directions were issued by RBI. We will be calling them as NBFC auditors report directions. That is the name of the directions, NBFC auditors report directions. We will be having a separate question with respect to that directions also, then we'll discuss. Next, second question. Satyam Private Limited is a company engaged in trading activities. It also has made investments in shares of other companies and advanced loans to group companies, accounting to more than 50% of its total assets. However, trading income constitutes majority of its total income, whether the company is a NBFC. Now, basically every NBFC, it needs to obtain certificate of registration from RBI. So every NBFC will be regulated by RBI, but there might be some small companies which are doing this business of giving finance and accepting deposits in a smaller portion. If RBI keeps on regulating all those types of NBFCs, then it would not be fair. So, in order to regulate only important NBFCs, there is a particular criteria. We will be calling that as 50-50 test. What is this 50-50 test? Let us see. Basically, we will be calling it as 50-50 test or principal business test. Now, in order to decide that a particular the principal business activity of particular NBFC is financing activity, there is this particular test. Let us see. In order to identify particular company as NBFC, it will consider both assets and income pattern as evidence from the last audited balance sheet. Basically, of the total assets of the NBFC, at least 50% of assets must be financial assets, and of the total income that is generated by the NBFC, 50% of the income must come from these financial assets. If both these conditions are satisfied, then you can call that particular type of company as NBFC, and it needs to obtain certificate of registration from RBI, and these type of NBFCs will be regulated by RBI. Simply, this is the 50-50 test. You need to remember that both asset condition and income condition needs to be satisfied. It is and, not or. Hope that is clear. Let us see that the company will be treated as NBFC when the company's financial assets constitute more than 50% of the total assets, and income, see here it is and, income from financial assets constitute more than 50% of the gross income. Hope that is clear. Next, regarding that, we are having a particular problem, you can say. Let us see. Question number 3, which is again based on same concept, 50-50 test, but here we will be solving the numbers. Okay. ABC Limited is a company registered under the Companies Act 2013. The company is engaged in the business of loans and advances, acquisition of shares, stock, bonds, debentures, securities issued by government or local authorities. Okay. For the year ended 31st March 2021, following are some extracts from the financial statements. What are they? Paid up share capital is 40.53 crores. Non-current assets is 55.9 crores and current assets is 344 crores. Total assets turns to be 530 crores. Now, total assets is 530 crores, and of these, financial assets is, here I have calculated, it is 400 crores is the financial assets. Now, if you see, 400 crores is more than 50% of total asset. So, asset condition is satisfied. Coming to income condition, and here intangible assets is 3 crores. Basically, you should include that intangible, you should net off that intangible assets, right? So 530 minus 3, just a second, 530 minus 3, 527, this is the total assets. Of these total assets, more than 50% should be financial assets. Basically, while calculating the total asset, you should net off any intangible assets. Okay, if at all there are any intangible assets, you need to reduce that intangible asset from the total asset. Hope that is clear. This would be important point. And coming to the income portion, profit for the year is 7.25 crore. Okay, you need not consider this information is not relevant for us, because we are seeing income, not profit. here income from interest and dividends, that is income from financial assets, is 52 crores, whereas gross income is 102.57 crores, which is again, okay, the income from financial assets is also more than 50% of gross income. So here both asset criteria and income criteria is satisfied. So this particular entity will become an NBFC, and it needs to obtain certificate of registration from RBI, and it needs to maintain net own funds of 100 crores. Okay, the same you need to write. Next, and in the examination you need to properly present this calculation. Okay, question number 4. Sudhir and Associates, a firm of chartered accountants, was appointed as auditors of an NBFC. The audit work has been completed. The audit team, which was involved in field work, came across various observations during the course of audit of this NBFC and have also an limited understanding about the exceptions which are required to be reported in the audit report. They would like to understand in detail regarding the obligation on part of an auditor in respect of exceptions in his report, so that they can conclude their work. Please explain. Basically he is asking you about exception report. As per auditor's report, Reserve Bank directions 2016, uh, there are certain directions that have been given to the auditor, that he has to report in the audit report of NBFCs. In those directions, this exception report is also part of those directions. Now basically this question, it is a direct question. It is directly asking you to explain about this exception report. But there is one particular question which is quite typical, because in that question, if you read that question, you will not be able to identify that it is asking about exception report. We'll also read that question, because answers for both the questions is same. Where is that question? Yeah, here it is. See, you concentrate while reading this question, because it is quite important question. Because if this question is asked in the examination, 100% you will not be able to identify that it is asking about exception report. Let us see. Krishna Private Limited is primarily into the business of selling computer parts. However, the company is fulfilling the principal business criteria as at the balance sheet date. That is, financial assets are more than 50% of the total assets, and financial income is more than 50% of gross income. Okay, till here he is saying that this particular entity is a NBFC. Now, what he is asking you, what shall be the obligation of statutory auditor in such a scenario? In such scenario, what shall be the obligation of statutory auditor? Basically, with respect to NBFCs, the specific obligation, this type of obligation, it is not present with respect to any other type of entity. Okay, it is present with respect to NBFCs. It is exception report. Okay, so even this question is also asking you to explain about exception report. Let us go through this. First of all, in the given case, Krishna Private Limited is fulfilling that asset criteria and income criteria, so it becomes a NBFC. And in case of NBFCs, auditor needs to give exception report if in the following matter. See, in such a scenario, the statutory auditor has an obligation to submit exception report to the RBI on the following matters. What are they? Where, in case of non-banking financial company, the statement regarding any of the items referred to in paragraph 3 of NBFC financial companies Auditors report Reserve Bank Direction 2016 is unfavorable or qualified. Basically, in paragraph 3 of NBFC Auditors Report Direction, it has given directions to the auditor regarding what matters has to be reported in case of all the NBFCs, what matters has to be reported in case of NBFCs accepting deposits, and what matters has to be reported in case of NBFCs not accepting deposits. Now, with respect to any of these matters, if if the auditor is having any qualified opinion, any unfavorable opinion, then auditor needs to give this unfavorable this exception report. Along with that, if auditor finds that the NBFC has contravened any of the provisions of Chapter 3B of Reserve Bank Act, or NBFC acceptance of public deposits Reserve Bank Directions 2016, or NBFC non-systematically important non-deposit taking directions, or NBFC systematically important non-deposit taking and deposit taking directions 2016. If any of the provisions of these know uh, any of the provisions of these particular three aspects is contravened by the NBFC, then auditor needs to give exception report. To whom the auditor will give exception report? Auditor will submit this exception report to the respective concerned regional office of the Department of Non-Banking Supervision of RBI, under whose jurisdiction the registered office of the company is located. Okay, to that particular regional office, the NBFC will submit exceptional report. Hope that is clear. And here, in this exceptional report, auditor will not discuss about compliance of any of these provision. Auditor will discuss only about contravention. What is the difference? See, if auditor finds that the NBFC has contravened with any of these three provisions, okay, any of provisions contained in these three, then auditor will uh, discuss about that or report that in exception report. But if all the provisions are complied, then auditor will not speak about that in the exception report. Okay, auditor will not say that the NBFC has complied with all these provisions. Like this, auditor will not say in exception report. In exception report, his duty is to report only exceptions. That is, only non-compliances will be reported. Compliances will not be reported. Okay, so that is clear. If you see, exception report is quite opposite to audit report. Basically, in the audit report, if the financial statements are showing true and fair view, auditor will say that financial statements are showing true and fair view. But if financial statements are not showing true and fair view, in that case, again auditor will say that financial statements are not showing true and fair view. He will give qualified or adverse or a disclaimer of opinion. But in case of exception report, auditor will report only if non-compliances are found. If everything is complied, he will not discuss about that in this compliance report, sorry, this exception report. Hope that is clear. So even if they directly ask you about exception report, you can write the same answer. With this, we have completed question number 11 and also question number 4, right? Moving to question number 5. Abhimanyu Finance Limited is a NBFC and was in the business of accepting public deposits and giving loans since 2015. The company was having net own funds of 1 crore 50 lakhs and was not having registration certificate from RBI and applied for it on 30th March 2021. Basically, here you can write it as 150 crore. Okay, 150 crore. You can just change the question part. Okay, and the company appointed Mr. Kabra as its statutory auditor for the year 2021. Advised the auditor with reference to auditor procedures to be taken and reporting requirements on the same in view of CARO. Basically, if you see in CARO 2020, clause 16 deals with registration under 45 IA of RBI Act. With respect to that, what are the audit procedures that the auditor has to perform? See, there is a linking between this NBFC and clause 16 of CORO. As per clause 16 of paragraph 3 of CORO 2020, the auditor is required to report whether the company is required to be registered under section 45 IA of Reserve Bank of India Act, and if so, whether the registration has been obtained. Okay, the same wordings you will find in clause 16 of CORO 2020. So, with respect to that, what are the audit procedures that the auditor has to perform? First of all, the auditor should examine the transactions that have been conducted by the company, whether these transactions are falling within the scope of the transactions that are prescribed for NBFC. Okay, that asset criteria 50/50, income criteria 50/50, that auditor needs to check. Okay, the next point is that only the financial statement should be examined to ascertain whether company's financial assets constitute 50% of total assets and income from financial assets constitute more than 50% of gross income. I guess you know what is this financial assets. In financial reporting you will be reading. Okay, if you have to receive any amount like debtors, or you have invested the investments, all those will be coming under financial assets. Okay, whether the company has net worth funds of 100 crores and whether the company has obtained registration as NBFC. If not, the reasons should be sought from the management. Basically, the auditors in his, you know, in his reporting as per clause 16 of CORO 2020, auditor needs to focus on these points. See, the auditor should report incorporating the following points. What are they? Whether the registration is required under 45, whether registration is required. If so, whether it has been obtained. If not obtained, what are the reasons? Okay, in this manner he needs to report. Next, question number 6. Basically, I don't know why I like this question very much. Okay? It will be a simple question related to frauds by NBFCs. I don't know why. If I see this question, I feel like this question is very easy. Write a short note on qualification of frauds by NBFCs. Basically, in order to properly classify the frauds, okay, in order to properly report the frauds that have been taken place in the NBFCs, certain classification has been done. If this particular type of fraud is taken place, this will be coming under this category. Like this, certain classification has been done in NBFCs. Okay, in the frauds that will take place in the NBFCs. So what are those different types of frauds that he is asking you? Now, in order to remember these frauds, you can use a simple mnemonic: mutual fund by name SIA. Okay, there is a particular mutual fund and the name of mutual fund is SIA. Okay, in this mutual fund, certain frauds are taking place. What are those frauds? Okay, in this manner you can remember these frauds. First of all, M for misappropriation and criminal breach of trust. F, fraudulent encashment through forged instruments, manipulation of books of accounts or through fictitious accounts and conversion of property. U, unauthorized credit facilities extended for reward or for illegal gratification. N, negligence and cash shortages. With respect to this negligence and cash shortage, there is a particular point that you have to remember that I will tell you. Next, with respect to D, there is no mnemonic. Next, C, cheating and forgery. I, irregularities in foreign exchange transactions. A, any other type of fraud. Okay, with this you can remember all these frauds. Mutual fund SIA, the name of the mutual fund is SIA. Okay, now with respect to negligence in cash shortages and irregularities in foreign exchange transactions, okay, these two has to be reported as fraud only if the fraudulent intention is identified at the time of the identification of fraud. Okay, only then you need to report this, otherwise you need not report. See, cases of negligence and cash shortages and irregularities in foreign exchange transactions are to be reported as fraud if the intention to cheat or defraud is suspected or proved, okay, only if the intention, the fraudulent intention is suspected, only then you need to report, okay. However, with respect to negligence and cash shortages, see, the following cases where fraudulent intention is not suspected, proved at the time of detection will be treated as fraud and reported accordingly. Okay, in the following two situations, even though fraudulent intention is not identified, they will be reported. What are those two situations? First of all, cash shortages of more than 10,000. If at all there is a cash shortage of more than 10,000, first of all, what he said, in case of cash shortages, if fraudulent intention is suspected or proved, only then you report it. But for that, another exception, in the following situation, you report it as cash shortage even if fraudulent intention is not identified, provided the amount of cash shortage is more than 10,000. That is the first situation. Second, in the second situation also, you need to report it as fraud even if fraudulent intention is not proved or suspected, provided cash shortage of more than 5,000 is detected by management, auditor or inspecting officer and has not been reported on the occurrence by the respective person who is handling the cash. Okay, the respective person who is handling the cash has not identified the fraud at the time of occurrence, but the fraud has been, okay, the shortage of cash has been identified either by management or by auditor or by inspecting officer, and that cash shortage is more than 5,000. In that case, even though fraudulent intention is not identified or suspected, you need to report it as fraud. Hope that is clear. Next, question number 7. Ram and Associates, a firm of chartered accountants, are the auditors of NBFC. Some of the team members of the audit team who audited this NBFC have left the firm, and the new team members are in discussion with the previous team members who were still continuing with the firm regarding the verification procedures to be performed. Okay, in the previous audit team, some members has moved out and some members are still present. Now in the new audit team, the new members who have come into the audit team are discussing with the existing team members. Now in this context, please explain what verification procedures should be performed in relation to NBFC's investment and credit company. Okay, in respect to investment and credit company NBFC, what are the audit procedures that has to be performed? Basically, in this type of companies, the main focus will be on two areas. In the name itself, you can find those two areas. First one is investments that have been made by the company, made by the NBFC, and credits, that is loans that have been issued by NBFC. These two areas will be focused. So auditor needs to verify these two areas properly. So in our answer also, we need to provide the audit procedure for these two areas. Let us see. First, points related to investment. With respect to investment, what should be the audit procedure? Let us see. First of all, auditor, he needs to check existence of the investment, whether investment is actually present or not. For this, what he can do, he can do physical verification of the investment certificate or the securities that are present with the entity. Or if the investment certificates are not present with the entity, then he can obtain external confirmation. Okay, if the entity, the NBFC is holding securities through depositories, depositories is like an NSDL or a CDSL. In that case, you can obtain external confirmation. With these two, you can verify the existence of investments. Once existence is completed, classification, whether the investment is properly classified as a current or non-current. For this, you need to verify the intention of management. Okay, so you need to obtain representation from the management. what is their intention, whether they are holding it as a long term or short term, okay, current or non current. So classification. Next, valuation, whether these uh, investments have been properly valued, whether accounting standard 13 has been complied. These points you will check with respect to valuation. Next, authorization, whether proper authorization was present at the time of buying the investments and also at the time of selling the investments. So authorization. Next, income recognition. Now you have made investments, means obviously you will receive income in the form of dividend or interest. Now with respect to dividend, you should keep in mind that dividend has to be recognized as income only on cash basis. Okay, only on cash basis dividend has to be recognized as income. So these points auditor will verify with respect to investments. Coming to credit, that means loans that have been given by NBFCs. Now, first of all, with respect to loans, whether proper sanctioning was present. At the time of sanctioning the loan, proper authorization must be present. Various documentations has to be kept. Whether all the procedures with respect to granting the loan, sanctioning the loan are followed or not, that auditor will check. Next important aspect with respect to loans is security. What type of security NBFC has accepted, whether the value of this security has reduced now, okay, to replace that security, whether additional security has to be taken, whether proper charge has been created on that security, okay, these aspects auditor needs to verify with respect to security. Next, another important point that the auditor needs to keep in mind while verifying these loans is the NBFC, it should not grant loans against the security of its own shares. Okay, because if it accepts its own shares as a security, though its own shares will be given it to as security, then they will become treasury shares. This concept of treasury shares, it is not present in India, okay, it is present in other countries, but in India this concept of treasury shares is not present. Okay, treasury shares is if you are owning your own shares, then they become treasury shares. Okay, in India those type of shares has to be cancelled. So auditor needs to take care that loan against the own shares should not be given by NBFC. Sorry. Next, auditor should also check whether this prudential norms have been properly complied or not. Prudential norms related to asset classification, income recognition, provisioning requirements for bad and doubtful debts, okay, whether all these prudential norms has been properly followed or not. And there should be regular follow up system, like you need to regularly check the credit worthiness of the borrower. You need to regularly follow up the value of the security that has been given. In case the value decreases, let's say if they have given uh, any land or any other shares, okay, not the NBFC shares, any other shares as security, then the value of shares in the stock market, they might be reducing. Okay, in that case you should ask that particular borrower to refill the security. So there should be continuous follow-up system. Whether that follow-up system is present or not, that has to be verified by the auditor. And finally, classification. Okay, check the classification of loans and advances. That is, you will be classifying loans and advances into standard, substandard, doubtful, loss. Okay, just like in banks, in case of NBFCs also this type of classification will be present. Whether that classification has been properly made or not, that needs to be verified. Next question, explain the differences between division 2 and division 3 of schedule 3 of Companies Act. Basically division 2 deals with format of financials for other than NBFCs who follow Ind AS. Okay, for normal companies other than NBFCs who are following Ind AS, they needs to prepare their financial statements as per format of schedule 3 division 2. And division 3 of the same schedule deals with format of financials for NBFCs. Now he is asking you what are the differences between division 2 and division 3. Okay, what are the differences in the formats between this division 2 and division 3? Basically this is a quite important question. Now the first difference is NBFCs have been allowed to present items of balance sheet in order of their liquidity. Okay, they can present their assets in the order of liquidity. Okay, most realizable value, most liquid asset can be presented first, and the least liquid asset can be presented last. Like this, in the order of liquidity, they can present the assets, but this option is not available for normal companies as per division 2. Next, NBFCs are required to classify items of balance sheet into financial and non-financial, whereas other than NBFCs, that is as per division 2, this classification is as to be current and non-current. Okay. Next, NBFC is required to separately disclose by way of note an item of other income or other expenditure if it is more than 1% of total revenue. Okay, total income. If any item of expenditure or any item of income is more than 1% of total income of the NBFC, then it has to be presented separately. It cannot be clubbed into other income. Okay, whereas in case of division 2, for other than NBFCs, disclosure for any item of income or expenditure which exceeds 1% or 10 lakhs, whichever is higher. Okay, that type of item require separate presentation. Okay, an item of expenditure which is more than 1% of total revenue or 10 lakh, whichever is higher, requires separate presentation. It cannot be clubbed to other income. Next, NBFCs are required to separately disclose under receivables debts due from any limited liability partnerships in which the director is a partner. Okay, if the director of the NBFC is a partner in any LLP and that LLP has to give any amount to NBFC. Okay, NBFC is having any receivable from that particular type of LLP, then that has to be separately disclosed. Why separate disclosure is required? Because in that LLP, the director of NBFC is a partner, so separate disclosure is required. Hope that is clear. Next, NBFCs are also required to disclose items comprising revenue from operations and other comprehensive income on the face of profit and loss account. Okay, separate disclosure of trade receivable which have significant increase of credit risk and credit impaired. Okay, for the loans which are having high credit risk and credit impaired must be disclosed separately, and the conditions or restrictions for distributions attached to statutory reserves as per respective laws has to be disclosed. Okay, these are the points of differences with respect to division 2 and division 3 of schedule 3. Next, question number 9. You are appointed as auditor of NBFC registered with RBI and which is accepting and holding public deposits. You are considering your report. Here he is saying it is accepting public deposits. That means it is NBFCD, accepting public deposits. You are considering your reporting requirements in addition to your report under section 143 of the Companies Act 2013 on the accounts of this NBFC as per the prescribed directions. Please explain what points are required to be known in respect of separate report to be given by you to the board of directors of this NBFC. Basically, in the audit report, basically all the requirements which are required as per section 143 of Companies Act 2013 will also be applicable to NBFCs also. Along with those requirements, additional requirements that are specified in NBFC auditors report directions should also be reported by the auditor. Okay, now in the auditors report direction, there are three bifurcations. Basically, let me tell you, auditors report directions. Here directions are given with respect to all NBFCs, with respect to NBFCs accepting deposits, with respect to NBFCs not accepting deposits. Okay, now auditor, he needs to report on these points for all NBFCs, and auditor needs to report on these points for NBFCs accepting deposits. Okay, these are specific points of points that have to be reported in case of NBFCs accepting deposits. Okay, along with these points, on these points also auditor needs to report for these NBFCs, because these points are to be reported for all NBFCs, including NBFCs accepting deposits and NBFCs accepting not accepting deposits. Okay, and there will be certain specific points for NBFCs not accepting deposits. Okay, that means these are the common points for all NBFCs. These are specific points for NBFCs accepting deposits. These are specific points for NBFCs not accepting deposits. But these has to be reported here also, here also. Hope that is clear. Now let us see. Now in our question, he is asking about this. What are the specific points that has to be reported in case of NBFC accepting deposits? Let us see. Now if you see in your question bank, you might find this answer somewhat lengthy. Basically, the question that is present in your question, the answer that is present in your question bank is directly copy pasted from the RTP. But here what I have done is I have just made some modification. Okay, the unnecessary wordings I have removed. Okay, but the key terminologies and whatever is required for the examiner, all those I have kept. Okay, I have just tried to make this answer short, but the key terminologies and the requirements of ICI all will be present in this answer. Okay, if you want, you can write that same answer that is present in your question bank, or you can shift to this answer. Okay, now what are the points? Whether public deposits accepted by the company together with other borrowings means borrowings from the public by issue of unsecured non-convertible debentures or any other bonds, or from its shareholders. If the NBFC has taken any borrowings from the shareholder, even these will be included. Okay, all these total borrowings or within the limits admissible as per the NBFC acceptance of public deposit reserve bank direction. Okay, there will be certain limit that will be specified for the NBFCs. Okay, whether the total borrowings are within that limit or not, that has to be verified by the auditor. Next, whether public deposits held by the company in excess permissible limit or regularized in the manner provided in the said regulations. Okay, if in case excess borrowings are held, whether those excess borrowings are properly regularized. How they will be regularized? Basically, the NBFC, if it has crossed the limit, it needs to regularize by following points. It should not accept any new deposits, and the existing deposits, they will run to maturity, and any deposits which have matured, they should not be renewed without the prior consent of the particular depositor. Okay, this way the NBFC need to regularize the borrowings that has crossed the limits. Okay, borrowings or the deposits that has crossed the limits. Where NBFC is accepting public deposit without a minimum investment grade criteria rating from from an approved credit rating agency. Basically, all the NBFCs, they needs to obtain credit rating from the credit rating agencies. Basically, the credit ratings will be like A plus, A, double A, triple A, like this the credit rating will be. Now, in order to accept the public deposits, there will be certain credit rating. Only if that credit rating is present, minimum that credit rating is present, NBFC will be allowed to accept the public deposits. More specifically, there will be limits for each credit rating. Just for example, I'll say, if the credit rating is A plus, the NBFC can accept 1,000 crore deposit. If the credit rating is AA, it can accept only 500 crores. Like this, the amount of deposits that it can accept is linked to its credit rating. Based on its credit rating, the deposits, the respective amount of deposit it can accept. So auditor needs to check whether public deposits that have been accepted by or by the NBFC is without minimum investment rating, whether it has obtained the public deposits. Whether the capital adequacy ratio as disclosed in the return submitted to bank means RBI, has been correctly determined, and whether such ratio is in compliance with minimum CRAR requirement. Okay, whether capital adequacy ratio that has been submitted to the RBI is properly calculated, and whether it is within the minimum required limit, and whether the company has violated any restrictions on acceptance of public deposits as provided in NBFC public deposit. This is a similar point, repeated point, you can say. Whether the company has defaulted in paying to its depositors in the interest or principal, whether the NBFC has defaulted paying any interest or deposits, even this has to be reported by the auditor. Whether the company has complied with the prudential norms on income recognition, accounting standards, asset classification, provision for bad and doubtful debts. Auditor needs to report compliance with prudential norms. Whether company has furnished to RBI within the stipulated period return on deposits. Within the specific period, the NBFC needs to furnish certain returns on deposit that the NBFC has accepted, and the outstanding deposits to Reserve Bank of India. This return has to be submitted to Reserve Bank of India, whether that has been submitted within proper time limits, and whether the company has furnished to RBI within stipulated period quarterly return on prudential norms. These points has to be reported by the auditor in his audit report of NBFCs that are accepting deposits, in addition to the reporting requirements of section number 143. Okay, next. Again, this question is related to same directions, but with respect to NBFCs not accepting deposits. Earlier, question number 9 was with respect to NBFCs accepting deposits. Now it will be with respect to NBFCs not accepting deposits. Karma Private Limited is a non-deposit taking, non-systematically important NBFC. Okay, here you need to identify that this is a non-deposit taking NBFC registered with Reserve Bank of India. The statutory auditor of company is required to give a report to board of directors. What shall be the content of auditor's report to the board? Okay, now he is asking the specific reporting requirements in case of NBFCs not accepting deposits. Now, for these NBFCs which are not accepting deposits, you will first of all report on the points which are commonly applicable for all the NBFCs. Matters to be reported in case of all NBFCs. Okay, this point you can write even in above question also. Okay, for above question also you can write this point, then write the above answer. But since the answer to above question itself is huge, we haven't included this uh, reporting for all NBFCs. Okay, now what are the matters that has to be reported by the auditor? Whether the company has obtained certificate of registration from RBI, and in case of a company holding certificate of registration issued by RBI, whether it is eligible to continue to hold that certificate of registration. The eligibility should also be checked. Okay, first of all, whether certificate of registration is being held, if being held, whether it is eligible to hold that certificate of registration, and whether the NBFC is meeting the required net on fund requirements criteria. These 3 points has to be reported in case of all NBFCs. Next, points that has to be reported in case of NBFC is not accepting deposits. Now, if the NBFC not accepting deposits means auditor has to check whether any board resolution has to be passed, specifically not allowing the NBFC to accept deposits. So, whether the board of directors passed a resolution of non-acceptance of public deposits, even after passing that resolution, whether NBFC is accepting the public deposits by contravening that resolution, that has to be checked, that has to be reported, not checked. Whether the company has accepted any public deposits during the relevant year. Okay, the NBFC is a non-deposit accepting NBFC, and whether it is accepting any deposits, that needs to be reported. Whether the company has complied with the prudential norms, this is the common point. And in respect of NBFC non-deposit systematically important, whether the capital adequacy ratio as disclosed in the return submitted to RBI in form NBS 7 is properly calculated and whether it is within the limit or not, that has to be reported, and whether the company has furnished to RBI annual statement of capital funds, risk asset exposure and risk asset ratio in NBS 7 within the stipulated period of time or not. Okay, if it has not been submitted within the stipulated period, auditor needs to report it. Finally, if the NBFC is a microfinance institution, whether it has been properly classified as such a microfinance institution or not. See whether NBFC has been correctly classified as a NBFC microfinance institution, NBFC MFI. So these are the points of specific reporting in case of NBFCs not accepting public deposits. This question number 11 we have already done. Moving to question number 12. You are the auditor of Mahabali Limited, a NBFC registered with RBI. How would you proceed to ensure the compliance of prudential norms directions by it? First of all, what are the prudential norms? You will list them. The NBFC, the RBI has issued various prudential norms. The auditor has to verify the compliance of prudential norms relating to income recognition, income from investments, asset classification, provision for bad and doubtful debts, capital adequacy norms, prohibition of granting loans against its own shares, and prohibition on loans and investments for failure to repay public deposits, and norms for credit concentration. Like this, various prudential norms have been issued by the RBI. Now, the auditor shall ensure the board of the NBFC has framed a proper policy for granting demand and call loans. Basically, there will be a high risk in this demand and call loans. So, a proper policy has to be framed. This demand and call loans, they will not be given to everyone. Okay, only based on their credit worthiness and based on their association with the NBFC, these has to be given. So, with respect to these call and demand loans, proper policy has to be framed by the NBFC. That has to be checked by the auditor. Next, the auditor should verify the classification of advances and loans as standard, substandard, doubtful, loss, and proper provision should be made for these respective loans or advances. Okay, based on each criteria, a particular percentage of provision is required. That much amount of provision is has to be made, whether the provision has been properly calculated or not. That has to be verified by the auditor. Auditor should ensure that unrealized income from NPS, non-performing assets, should not be taken to profit and loss account. Okay, the income from NPS has to be recognized only on cash basis, and the auditor should check all NPS of previous year to verify whether during the current year any recoveries has come. Okay, in the previous year there will be certain NPS, whether all those NPS are also NPS in current year or there is any recovery from those NPS, that has to be verified. Okay, these are certain points that has to be verified with respect to compliance with prudential norms by NBFCs. Question number 13. CA Nadar is conducting the statutory audit of RHL Limited, a non-banking financial company. It has branches in various parts of India. The company, with a focus on housing finance, has outstanding convertible debentures of 150 crores. The company reportedly missed interest payments on 15 crores on its debt because of inadequate liquidity. As a result, RHL Limited faced a series of downgrades by rating agencies on its debts over the past 2 months. Rating was cut to D from A4, implying that company was in default as expected to be in default soon. What aspects CA Nadar should look into in relation to activity of mobilization of public deposits, particularly in respect to downgrading the credit facilities by RHL Limited? As I have already told you, the amount of deposits that the NBFC can accept is directly linked to the respective credit rating that it has. Now, in this question, the credit rating has been reduced. In this situation, what points has to be verified by the auditor? Basically, if the credit rating has decreased, the respective borrowings of the NBFC should also be decreased. Borrowings or the deposits that the NBFC has taken should also be reduced to the respective credit rating. That has to be checked whether it has been reduced or not. If it is not reduced, it has to be regularized. Okay, how it will be regularized, that you need to discuss in the answer. Let us see. First of all, you need to say that the ceiling on quantum of public deposits has been linked to its credit rating as given by approved credit rating agencies. This point you need to communicate, that the deposits that it can accept is linked to the respective credit rating. Then, in the event of upgrading or downgrading of credit rating, the auditor should bear in mind that NBFC will have to increase or reduce its public deposits in accordance with the revised credit rating. Okay, if the credit rating is decreased, the respective public deposit should also be decreased by the NBFC. If the credit rating is increased, then NBFC can increase its public deposits. This point has to be remembered by the auditor in case there is any downgrade or upgrade of credit rating. Okay, now this is the main point. In the event of downgrading of credit rating below the minimum specified investment grade, a non-banking financial company, being an investment and credit company or a factor, shall regularize the excess deposits as provided hereunder. How it can regularize? With immediate effect, stop accepting fresh public deposits, and all the existing deposits shall run till the maturity. That means all the existing deposits, you don't disturb them, they will run till the maturity, but you don't accept fresh deposits. And no matured public deposits shall be renewed without the express and voluntary consent of the depositor. There should not be any automatic renewal of the deposits that have matured. You can renew them only with the express consent of the depositor. And finally, you need to report this position within 15 working days to the concerned regional office of RBI. Okay, this is how you will have to regularize your deposits, public deposits, if in case your credit rating has been downgraded. Next, what is a core investment company under the Reserve Bank of India regulations? What are the specific reporting requirements to be considered by an auditor in respect of core investment company under core? Basically, he is asking about what is a core investment company. Basically, core investment company is a company of the total assets of this company. 90% of assets will be in the form of investments in the equity or debentures or any other securities or any public deposits, sorry, or any bonds. Okay, 90% of its total assets will be in the form of investments, and also of its total assets, 60% must be investment in the equity of its group companies. See, it holds not less than 90% of its net assets in the form of investments in equity shares, preference shares, bonds, debentures, debts, or loan in group companies. Its investments in equity shares, including instruments compulsorily convertible into equity shares within a period of 10 years, okay, in group companies and units of infrastructure investment runs, trust only as sponsor constitute not less than 60% of its net assets as mentioned in clause 1 above. Okay, there are two conditions. First one is 90% of its investments, sorry, 90% of its assets should be in the form of investments in group entities. Second condition, 60% of the net assets should be in the form of investment as equity or investment in infrastructure investment trust as a sponsor. How much it should be? 60% of net assets. Okay, not 60% of these 90% of assets, 90% investments, 60% of total assets. Okay, 90%, 60%, you need to remember. And it should not carry any regular trading. Okay, it can buy or sell the shares in the block deal. Okay, but it should not carry any regular trading. Block deal is like there will be certain minimum amount of shares that has to be sold. Okay, if minimum amount of shares are sold, then that becomes a block deal. Okay, in order to call a particular transaction as a block deal, there is a requirement of around minimum 5 lakh number of shares has to be sold, or value of up to around 10 crores. I guess I don't exactly remember. There is a particular definition for block deal, and these block deals, they will not happen in the normal trading window. Okay, in the stock market there will be a separate window by name block deal window. This timing of this block deal will be around 9 to 9:15. In this period block deals will happen. Okay, that is completely different concept. You need not remember that. Okay, but you need to just remember that these core investment company, it should not carry regular trading. However, it can involve in block deals, and it does not carry any other financial activity apart from investment in group companies. Okay, by this the discussion related to question and answers from NBFC is completed. And if you want to purchase the audit fast track class for November 2023, you can visit our website lecturepedia.in and you can place your order. By this I'll be winding up this video as of now. And yes, I know there has been a delay in uploading these videos. From now I'll try to upload these videos as much fast as possible. Okay, take care, bye bye, see you.